All right, welcome to The Explainer. Today, we're diving into a real head-scratcher happening in the crypto market right now. See, on the surface, prices are absolutely red hot. But if you dig just a little bit deeper, well, the story gets a whole lot more interesting. Okay, so here's the puzzle we're trying to solve. You've got Bitcoin and Ethereum pushing prices we haven't seen since the last massive bull run, right? But where's the excitement? Where are all the headlines and the social media frenzy? I mean, the data shows public interest is shockingly quiet. So prices are way up, but the buzz, it's pretty much gone. So what's really going on under the surface? This disconnect is exactly what we're going to investigate today. We're going to use some pretty powerful data to get to the bottom of the market's true state. And honestly, the answer might surprise you. Now, to solve a mystery like this, you need the right tool. So let me introduce you to the composite risk indicator. Just think of it like the market's own personal thermometer. It doesn't just look at price, no. It combines dozens of different metrics. We're talking everything from on-chain transaction data to social media hype, and it boils it all down into one simple score to tell us how hot or how cold the market truly is. So, what is that thermometer reading right this second? Well, it's sitting at just 0.35. Now, I know what you're thinking. That number probably doesn't mean a whole lot on its own, but trust me, in context, it's a massive clue. And to really put that into perspective, think back to the peak speculative bubble of 2021. Back then, this indicator was absolutely screaming hot, reading above 0.8. So our current level of 0.35, it's incredibly cool by comparison. The big takeaway here is this. Despite these record high prices, the underlying market just isn't dangerously overheated. Not even close. Okay, that brings us to the next logical question, right? If prices are soaring, what on earth is keeping this risk score so low? What's the missing ingredient that usually sends this thermometer flying through the roof? Well, the answer is actually pretty clear and simple. It's the people. The social component of this risk indicator, the part that measures all the public attention and hype, is basically flatlining. It's like the party is happening, but nobody seems to have gotten the invitation yet. And look, this isn't just a gut feeling. You can measure this across the board. We're seeing really slow growth for crypto channels on YouTube and for analysts on Twitter. Social media engagement for the major exchanges, it's flat. Heck, even the Wikipedia traffic for basic crypto terms is minimal. The mainstream crowd, they just aren't here yet. So, is this whole silent rally thing just a fluke? A weird one-off? Well, not according to this analysis. It actually fits into a very predictable pattern of how capital, how money, flows through the crypto market. This cycle is often called crypto's four seasons. It's a pretty classic pattern. It all starts when new money flows into the biggest and, safest asset, Bitcoin. Once Bitcoin's had its run, profits tend to rotate into the number 2, Ethereum. After that, capital starts cascading down into other large established altcoins. And then in the final, riskiest phase, that money ignites a speculative frenzy in all the smaller projects. That last part, that's when the social hype usually explodes. So the big question is, where are we right now in that cycle? Well, the on-chain data suggests we are right on the cusp, transitioning from Season 2, that's the Ethereum phase, into Season 3, the large altcoin season. And there are some really interesting signals starting to point in this direction. First off, Ethereum is getting really close to its previous all-time high, which has historically been a trigger for money to start looking elsewhere. Second, check this out. Google search interest for the word altcoin is just starting to take up. And third, we're seeing a big surge in active users for major altcoins like Dogecoin. And that's a pattern that has shown up right before major rallies in the past. Okay, so let's tie this all together. What have we learned? The data shows a market with sky-high prices, but surprisingly low overall risk and almost zero public hype. Now, the big takeaway here, according to the source, is that this isn't a sign of weakness at all. Instead, it's a signal that we're in the early stages of a classic crypto capital rotation, happening right before the large altcoin season could be set to begin. So the historical pattern is pretty compelling, and all the signs we've looked at seem to be pointing in one direction. But of course, history is not a guarantee. It really raises the crucial question here. If this analysis is right, the issue isn't really if the next season will arrive, but when.